Folks, if it's Tuesday, it's your weekly, most comprehensive look at the world of business, finance, and economics. Welcome to Business Redifined. We want to talk about Sino-Africa relations or China-Africa relations. Huge trade flows happening between the two entities, and we want to talk about how the role of intermediaries in the banking and finance space helps catalyze this particular line of trade, the bilateral ties between the two countries. And we're privileged to have on set Muya Guo, that is the Senior Vice President and the head of the China desk at the Stanbic Bank. Welcome on set. So the trade between Kenya and China is still predominantly characterized by a trade deficit. What are some of the key areas driving the interest by Chinese multinationals coming into this market?
A lot of opportunities actually happening in Africa, especially if you're looking at leases. I think the continent has the highest or the fastest growth rate in that globally. So many things, if you look at the particular sectors, so for example, the energy and infrastructure sector, the manufacturing and industrial sectors, the consumer sectors, and then also the very hit like growth processing, like agriculture sectors. So a lot of opportunities in these particular sectors, and then also beyond, if we look at Kenya particularly. So for example, the service sectors, the tourism, like nowadays you can even see a lot of Chinese-run tour companies in Kenya to bring in like the tourists from China to this country. Yeah.
All right. And what are some of the niche targeted banking and financial intermediary services that they would be scouting for that then Stanbic Bank offers?
So I would say from Stanbic Bank perspective, we provide the full-fledged services to our Chinese clients. So that is also driven from our strategic partnership with Industrial and Commercial Bank of China, which in 2008, they acquired 20% of Central Bank Group's shareholding. So I think until now, this is still the biggest acquisition that happened in Africa. So from that part, we understand the Chinese corporates. Yeah. We understand what do they need to operate in this market. So what we're trying to achieve is how do we make the banking service accessible to them, so they don't need to worry about the bank sides, and so we can be an enabler for their success in this market.
Okay. And many multinationals looking into this market often point to me that one of the key things which they have to think about, especially when they're looking for an intermediary partner like Stanbic, is how to address the issues of foreign exchange risk. Yeah. How in particular do you assist businesses in that perspective?
So for like because at least we refer to our global markets. So for our global markets, so of course we do provide the spot trade. For spot trade, it's not only the most used, like for example, the dollar denominated currency. Yeah. So we also offer like CNY, the Chinese yuan denominated currency. So if you would like to do exchange directly from CNY to Kenyan shillings or vice versa, we are able to offer. But also beyond that, beyond sports, we can even provide you hedging solutions for CNY, not the traditional dollars and euros. Yeah.
I see. So quite a diversified portfolio there in terms of currencies. Africa is having a conversation about a continental free trade area to catalyze intra-Africa trade. I'd imagine that's a big offering for players like yourselves, especially looking at the China desk here. What are some of the opportunities you see that could unlock, and how are you positioning yourself for that?
Yeah, I think it's really a good opportunity for Chinese players, especially the manufacturers. So if you look at the current situation, so you trade between China and Africa, different countries, but that free trade policy, it can enable to accelerate the trade amongst the African countries. So that actually brings a very big opportunity for Chinese manufacturers to come to set up like factories, do investment, for example, in Kenya. And then they will enjoy and then target the neighboring countries or the African countries, and to improve that exports, not only to the traditional countries, but also to the African countries. If I use EU as an example, So right now, actually, China is the biggest external exporter for the EU region, because for EU, they also have like similar policies to encourage the free trade.
Okay. And so we are in an environment where businesses have challenges, especially when they're coming from the foreign markets looking for opportunities here. What are some of the typical challenges that Chinese businesses have told you they face in this market, and how do you help them navigate that?
Yeah, so I think this question comes very timely because we just had our Chinese Economic Forum. So that is one of the things from Stanbic Bank. We support our clients.
Yeah.
So because if you come to a new country, the macroeconomic environments always pose very biggest challenges to foreign investors. So just to understand like the current situations and then how to navigate it. So for example, if we look at Kenya, we are in the process has quite stable economic environment. However, face a lot of challenges. So when the investor comes in, I think the first thing, relatively high tax.
Yeah.
Much high interest rate comparing with the very low interest rate in China.
Yeah.
And then the foreign, we also touch base on that, the foreign exchange rate, and then etc, and then also a lot of delayed payment from the Kenya government, and then the high debt to GDP ratio, etc. So I think all of these and together do require the Chinese corporates and investors fully understand how can they operate in such environments other than their home country.
Okay. And then to flip that question is then, what are some of the unique opportunities that you see here, which you would be courting Chinese businesses to come and tap into?
Yeah, so of course, there's always silver lining and the flip side. So if you look at Kenya, for example, so a lot of Chinese companies are coming here, and then I think looking at the fast-growing middle class population. So that can help the Chinese companies tap into the consumer market.
Yeah.
So we do see that even like for the consumer sectors, now it's more and more Chinese brands I can see in the shopping malls in Nairobi. So I think that is one of the very key opportunities. And then second one, so for China, we are very strong, I would say, in the infrastructure sector.
Yes.
So for Kenya and then also the neighboring countries, so we do see deficit in infrastructure investments on like yearly basis. And so that also pose big opportunities for Chinese players to evolve or transform from the very traditional EPC type of contractors to do more and more like investors or private investment driven projects.
Okay. Digital payments and the digital disruption is changing both banking and the trade landscape. Yeah. How do you see that impacting China-Africa relations? And also critically, in terms of a payments platform, how does Stanbic Bank ensure it is ahead of the curve when it comes to digital payments in facilitating China-Africa relations?
Yeah, so when you are coming, look at the digital platforms, so we as a Stanbic, so beyond the online banking, of course, like what we call the business online to support our corporate clients to able to do the transactions anywhere seamlessly. So you don't need to think about, are you going to be in Kenya? Are you going to be in China? You can always go to our platform to authorize and then do payments. And then on top of that, we also have the online Forex platform. So you don't need to like call our traders like frequently. So you can just like use that platform to do your own trade. And then lastly, so we also have now an online trade platform. So you are able to log in and then to start applying your guarantees and letter of credit for that. So this is what Stanbic offers in terms of like the front line facing to our clients. But on the back end, so when you are talking about China and Africa, and then the currency, the Chinese yuan currency always come up as the top topic. And then from the Chinese government side, CNY internalization is a very key topic to motivate and drive the trade between China and the rest of the world. So from Stanbic and Standard Bank side, And then we already spent a lot of effort to make sure we have that infrastructure ready.
Yeah.
So, for example, right now, if you go to our online platform, you are able to do the payment in CNY as a currency. Yeah. But at the moment, we are using SWIFT system. But we already made a commitment. So Standard Bank is in the process to join SIPS. So SIPS is like equivalent assistance for CNY like transactions. Yeah. So that is also just show our commitment, like how important for the China-Africa relationship, and then when it's coming to the banking sector.
That's pretty interesting. I'm just curious as to what extent do you expect that to catalyze or increase or drive more trade flows between the two countries?
I would say it takes a journey. Yeah, it won't come up as one day, 1 year. We have been in this journey for, I think, more than 10 years now. So gradually, so for example, I remember back to 2017. So Stanbic was the first bank in Kenya to roll out CNY in cash at our counters. So from then to now, and then we are not only able to provide cash, but now we progress even to the CNY in letter of credit and then CNY in lendings. So that journey, we are working together with our clients. So I won't say like when we immediately deploy SIPs and then we are going to see like significant values like next day. Yes. But when the client wants to facilitate this currency, and then we are ready to support.
All right. Yeah. And when do you fully expect to deploy SIPs now?
So I think it's like from the plans, I would say it's end of this year or next year.
All right. Yeah. Fantastic. Good update there. As we talk about the digital infrastructure, of course, we always appreciate the leverage it gives us, the catalyzing impact it has. But consumers always ask on the flip side, what about the cybersecurity challenge that we see coming with the digital platforms? How do you ensure you have guaranteed your client's safety on that?
So from Standard Bank perspective, we are the safest bank in Africa for very consecutive years. So for the cybersecurity and the fraud, it's always the top priority for us. Mm-hmm. So it's beyond. We are also like making a lot of effort to make sure our banking infrastructures able to detect and then fight against the cyber attacks. And also it's like for our staff, employees, even like educating our clients, like how important the cybersecurity is in the banking industry.
Okay. What would you say are some of the common misconceptions that are out there about China, Africa, and China-Kenya relations for that matter?
A lot. Yeah. So, I heard also a lot. So, and also I read a lot, for example, from the debt trap, the trade deficit, China dumps cheap quality products to Africa and Kenya, which are all not true. But also the most recently, so if we are talking about the investments, right? So let's like these narratives. If Chinese investor comes to acquire the factory or set up factory, the Kenyan is going to lose jobs, and they're only going to employ Chinese, which is also not true. So if you look at, I would just give an example. If you look at the some of the textile factories, I think now setting up in Athi River. So in 1 year, they can employ like almost 2,000 local staff. And then if you go to that factory, you barely see Chinese managers. And so like that's also a very big drive for the Chinese investors to make sure their companies as localized as possible.
Okay. And maybe now the issue there is, speak to us about the role of technology transfer, especially from a market as advanced as China when it's dealing with African markets and Kenya in this case. How should we ensure then that there is technology transfer happening so there's mutual benefit?
Yeah, so I think that is why we always say like knowledge or the know-how transfer is very important. So what I use example like for the previous case is a manufacturing factory. So, but when we are also looking at, let's say, fintech and e-commerce, like which are more like technology-driven companies. So there are also a lot of Chinese companies are coming in to this market. And then so when they come in, so they bring in like the technologies we used in China, the know-how like we use in China, and then they come in here, and then so that knowledge transfer is very, very important for my view, and then for the Kenyans employees and staff to absorb, and then even for the local governments. And then how can we then leverage that technologies and then to convert into a more local driven companies? I think that will be the trend, not for the manufacturing and also for the technology companies.
Looking ahead, Mui, as we close our conversation, what do you expect to be the predominant forces driving China-Africa and China-Kenya relations in the next 5 years or so?
So if you look at the next 5 to 10 years, I would say it's, the China-Africa or China-Kenya relation is evolving. So the more drivers coming out, my view, from the private-led investment versus the more the government-led initiatives in the past. So if we look back 30, 40 years ago, it's, even in Kenya, a lot of like some companies came out to Kenya by following the China Act. So that is just like a pure government-led in projects. But now is going forward. I expect we're going to see more and more investments from the Chinese companies to Kenya and to Africa, leading by energy and infrastructure sectors, like the relevant projects, the manufacturing, like the factories. We also touch on, they do see a lot of opportunities here. And then, of course, also the consumers and then the agriculture and the fintech sectors. So if we look at last year, in 2024, I believe many people also followed on that FOCAC forum that happened in Beijing. So China did commit around $50 million investment to Africa in the next 3 years.
Correct.
So out of that $50 million, and then actually $10 million are going to come out directly from the Chinese companies, not from the Chinese government.
Yes.
So I think that is also showing the drive and then the trends we're going to be, and then for the next like 5 to 10 years for the China-Africa or China-Kenya relationship.
So we've spoken predominantly about helping Chinese corporates looking into this market to find opportunities, and many viewers would be curious, what about Kenyan businesses looking for opportunities in China? How would you support them?
Definitely. So we do have a particular, what we call the China-Africa trade desk to support this kind of clients. So for example, for the exporters from Kenya and Africa, so we have like a few initiatives to support them to understand the Chinese markets, understand the customs protocol, and then how to find and look for the right market in China, because China is very big.
Yes.
Yeah.
Yes.
So for example, so every year around November, there's this CIIE happening in Shanghai, which is the China International Import Expo. So that is initiative coming out directly from the Chinese central government to promote globally the exported goods into China. So as a Standard Bank, we always in November have a stand and at least export, and then to bring our clients who has interest into like the Chinese market, including I think like wine from South Africa, coffee from Kenya, honey from Zambia, etc.
Yeah.
So our clients, like every year when they participate, after they participate, they always share very positive feedback. So sometimes like one day at the export, they are able to make the business, which they might take 1 year to make.
Okay.
Yeah.
And when you look at the activity on your China desk, would you say the how does the mix look like in terms of the appetite coming here? Is it predominantly from energy and infrastructure? Are you looking at agriculture focus? Are you looking at manufacturing focus? Or are you looking at fintech and e-commerce?
Yeah, so from our side, so our focus still like on the energy and infrastructure, and then also the manufacturing side. So I think the energy and infrastructure is quite clear, and then when you look at the big projects, the transmission lines, the road, port, etc. And then for the manufacturing side, we also have a driving initiative which is called from Made in China to Made in Africa. So we, besides like for the clients, the manufacturing company to set up a greenfield factory or the business in Africa, we are also very actively looking for merger and acquisitions opportunities to help to link the capital and advanced technologies know-how from China, and then also very strong the local corporate in Africa.
Okay, my final question is, we're talking about trade, and many corporates in this market struggle with trade finance solutions, which are few and far-spaced, if I could put it that way, especially in an environment where the global macros are a bit turbulent. If you could give us a parting shot around the offering that you present on the table in terms of trade finance.
So for trade finance, usually when you look at that, it covers, for example, like guarantees, letter of credits, and then the working capital loans. So for us, and then it's also like look at the different sectors. So for example, for the energy and infrastructure sectors, we do support our clients when they get the projects and then they need to issue guarantees. So that guarantee offerings we have been running up like very nicely. So both we are able to offer like local limits to the corporates here, and so we have a lot of like partnership and appetite to the Chinese tier 1 banks, so they can do counter issuance from China to Kenya. And then together with that, and so we also observe there's some shortage of cash flows when you are running a project.
Correct.
So we can, of course, offer sometimes letter of credit for them to acquire the raw materials, and then also working capital for example, invoice discounting, etc. And then when you look at the manufacturing sectors, so their needs is different for trade finance. So then we have like a clients, we give them working capital facilities for them to acquire raw materials from abroad or even locally, and then together with letter of credit facilities for the same purpose. But I would like to just put one more thing. That is also when we are looking at the value chain. So the ecosystems. So for example, for the manufacturers, so we also offer distributor finance, for example, to support their value chain to grow. So if their distributor is able to get the funding support and then to be able to sell more goods or acquire more goods, and then our anchor clients, the factories, can also grow their business together.
All right. Thank you very much for your time, Muyego. We have been talking about China-Africa relations and the role of banking sector intermediaries like Stanbic Bank, whom we've had this conversation with, looking at a whole range of offerings in the market, especially on the trade finance perspective, and how Chinese multinationals can come into these markets, as well as Kenyan businesses looking for opportunities in the Chinese market, which, as you'd imagine, is a huge, vast market which unlocks various opportunities for businesses looking to scale. Keep it Business Redefined for any more on these details.